What's going on, y'all? Happy Friday. Welcome to another edition of the Friday Wrap Up with yours truly, Kevin Weedmark, aka the Mortgage Mouth. And speaking of the Mortgage Mouth, please don't hesitate to go out there on YouTube, give a subscribe, cutting content on the daily out there with the Daily Dose. I got my weekly wrap up that comes out on Monday, as you know, and then we also do the Friday wrap up. So, pretty much a very interesting week, right? We had tariffs. We had a slew of job earnings. We had the market feel that, the economy was slowing down. That seemed to push rates down a little bit. MBSs did better, Treasuries. And then on Friday, we had a revision to the Nonfarm payrolls, even though it came in light. Once again, it sparked inflation fears. The revisions were a little bit higher than what we had seen in the past. So it's kind of all over the place with just a lot of sideways movement. So the rates overall finished the week slightly better. We continue to see week after week a slight improvement to the 10-year Treasury and the mortgage-backed securities. So that's a good thing. Jobs data for the week showed a possibility of a slowing economy, which once again, as I already said, that kind of pushed rates a little bit lower initially, like on Tuesday, Wednesday, especially with that JOLTS report on Wednesday. But it was short-lived, and the banks continued to keep their spreads. They did not relinquish rates. They did not lower them by a ton. It seemed more that they held the lower side of the rates fairly steady, and the upper side was moving around just a little bit. Non-farm payroll revision sparked inflation fears. That was basically today. That was the overall gist. Traders obviously want to see inflation coming down. We've been sitting at like 2.8 to 2.6, so let's call it 2.7 for quite some time. And with the addition of tariffs, they seem to be the great unknown. They're here, they're not. Everyone's like, well, Mexico and Canada caved. But again, they are there. They are going to continue to be used as a pressure tactic for the Trump administration, and that unknown just does not sit easy with traders. And what it's doing is it's basically just keeping rates in a holding pattern right now. Even though everything right now is data driven as it should be, as opposed to speculation, the one speculation is no one really knows what tariffs long term are going to do. So that's kind of how that's laying out right now. New homes hitting the market at a rapid pace, and we're still in winter. I can't stress it enough that, on a national level, I wrote this on Monday, new home listings were up 10.8%. We are going to see an influx of homes for sale. What a great time if you're a buyer, if you've been sitting on the sidelines, particularly if you're a first-time home buyer. I think what a great opportunity to go look at some of that inventory that's been sitting out there with all this new stuff coming. The stuff that's been sitting a little bit, and let's call it even just stale, is an opportunity for your buyers to find the diamond in the rough. I'm starting to see it all over the place. So one thing I would keep an eye on, 10-year Treasury, as I said, keeps moving down, finished below 4.5% for the week. So it seems like every week, right, we're chipping away. Half a percentage. So that's a good thing. It gives us an overall good feeling that everyone believes, the perception is that this administration is going to do some great things, but we're still dealing with inflation fears. We're dealing with tariffs. We're dealing with employment. Looks like the economy is slowing a little bit. And let's be honest, we still have an astronomical national debt. I mean, until that all gets solved, and that's why I continue to say, lock those valleys, right? Ride out the peaks, because lower rates will be coming. You just have to be smart and when you should lock based on when you're under contract, when you need to close, etc. And again, buy downs. I think they're a great thing. My prediction is by the end of this year, we are going to be in the low sixes to maybe high fives. That's a whole percentage point from where we are today. So make sure when you're running your numbers on purchasing a house, you're doing them with the potential of where rates will be so you can make good decisions. All right, y'all, have a great weekend. You need anything, pre-approval for a client, you got a flyer, you just have a question, no question's a bad question, I'm working all weekend. Would love to hear from you. All right. Happy selling out there. And as always, if you need anything, please let me know. Cheers.